Welcome to the channel Get Rich. Today the company we are going to look into is Laurus Labs Limited. So it's a pharmaceutical company, so we're going to look into their business segments and their financial statements and finally the valuation for the next 1 and 2 year. So if you like this video, please like, share and comment, and if you want a free email newsletter from this channel, please subscribe in the link below. So let's get started. So Laurus Lab is a fully integrated pharmaceutical and biotechnology company with a leadership in generic APIs and major focus on antiretroviral drugs or ARV drugs, and also the hepatitis C and oncology drugs. So they are one of the leading suppliers of APIs in the ARV therapeutic area for multinational pharmaceutical companies. So they have 292 patent files, they have 150 patents granted, and they have 61 drug master files, and they have 60 plus products commercialized since their inception. So they currently have a reactor capacity of 4638 kiloliters and also 750 plus scientists, and they have top 10 generic pharmaceutical companies as their customers, and they have 27 ANDAs. And then if you look into their capabilities over the years or how they progressed over the years, so if you look into the period 2006 and 11, so they have ARV APIs, so their team strength is about 883, so they are mainly ARV or antiretroviral API provider. So their team strength is 883, and then they moved into an API company from the ARV only APIs, and then they moved into pharmaceutical companies with more diversification. So we'll see that in a later slide. So then they increased their scientists from 400 plus to 750 plus. They increased their team strength as a whole from 880 to 4800, and then their manufacturing units increased from 1 to 8, and then their reactor volume is increased from 220 to 4638, and also they filed a lot of drug master files, and then US ANDA they filed recently in the past 5 years, and also currently they have CDMO project pipeline, and then they have projects commercialized 4 in the last 5 years, and then they have a lot of patents filed and granted. So then if you look into their snapshot of this particular company, their market cap is around 30,200 crores, and their stock PE is around 38, and their return on capital employed is 38%, phenomenal. And if you look into their return on equity is 42%, that's very good. And if you look into the return on assets is 20%, that's also great. And if you look at the debt to equity, it's 0.53, it's little bit debt they have, so 0.53 is not a high number, but that's also not a low number. So 0.53 is it's manageable amount of debt they have. And also if you look into their dividend yield, it's 0.34%, and then PEG ratio is 0.83. and then if you look into their price chart, how Laurus Lab performed in the recent years, so it did phenomenally well in the recent months. So it ran up from 100 to 700, and currently it is sitting around 580 rupees. And if you look into their P ratio, so their average P ratio is somewhere around 28 to 30. Currently they are trading at around 38, which is on the higher side. And if you look into their business segment, what are their key business segment, where are their revenues are coming from? So they're in financial 2021, 39% of their revenue is coming from API, mainly from ARV, antiretroviral API, so 39%, and then their other APIs and oncology API and so on, it contributes 16%, and then their formulation business 35%, and then their synthesis business is 11%. And if you look at their recent quarter, so their APIs is 41%, their formulation business is 36%, synthesis is 20%, and their bio business is 3%. And if you look at the 9-month financial 2022, so 43% APIs, formulation business 39%, synthesis business is 16%, and bio business 2%. So they are shifting away from their ARV APIs and then diversifying into more and more formulation business, synthesis business, and bio business, and these business are highly profitable when compared to, or more profitable when compared to, ARV business. And also recent quarters this ARV business demand is dropping because in the recent quarter it ran up quite a lot, and then now it's destocking is happening, and then their demand for the recent quarters is declining, but it's going to normalize. The management guided it's going to normalize in quarter 4, so we'll also see that in API segment. And then if you look at their 4 key segments, so first one is generics API, and then they have finished dosage form or formulation business, and then they have synthesis, and then they have bio. These are the 4 key business they are focusing on. So in financial 2017 when they are IPO'd, so their 80% of their revenue came from ARV API. Now they diversified into formulation business, synthesis business, and then the other APIs and so on. So they are doing a lot of diversification while keeping their growth on. And if you look at their API business, so almost 54% of their revenue contributed for their API business in financial year 2021. And then if you look into their API business, so they develop, manufacture and sell different APIs and advanced intermediaries. And then if you look at their different key product and service offerings, there's antiretroviral is the key one, and then anti-diabetic, cardiovascular, proton pump inhibitors and oncology. And then they have 60 plus commercialized products and 61 DMF filed. If you look at their infrastructure, they have 4 manufacturing facilities, 4,186 kiloliter, and they have 1,000 kiloliter under expansion. And then if you look into their generic APIs, so as you see in the quarter progressing on, their APIs, they are diversifying into more and more oncology APIs and other APIs. They are reducing their antiretroviral APIs. And if you look at their antiretroviral API revenue growth in quarter 4 financial 2020, it was 273 crore, and then it increased to almost 568 crores in quarter 3 2021, huge increase. And then currently it's decreasing because a lot of inventory is destocking is happening, so that's why their growth is reducing or degrowing this antiviral API. It's going to soften after quarter 4. That's what management guided. And if you look into their formulation business, so almost 35% of their revenue contributed from formulation business. So they develop and manufacture solid formulations for low and middle income countries, North America and European Union markets. And they also have in-house API strength, which is backed because they can use their APIs for their own formulations. And then if you look at the product and service offerings, they have antiretroviral, anti-diabetic, cardiovascular, central nervous system, proton pump inhibitors. So they have filed 27 ANDAs with US FDA and 9 final approvals and 8 tentative approvals. And then they completed validation of 2 products. They filed 12 dossiers in Canada, 9 in Europe, 8 in WHO, 2 in South Africa, 2 in India, and 14 in the rest of the world. And if you look at the infrastructure, they have the capacity of about 5 billion units per year, and their capacity enhancement to 10 billion units per year in progress. So they are almost doubling their capacity in financial year 2022. And if you look at their different files approved or pending, so different filings in the rest of the world, they have 35 in total, and then Canada 16, Europe 11, and then US 30. And if you look at their generic FDF division, so it's not growing much higher rates, but still it's growing on the good direction. And if you look at the order books, they have very strong order books in the rest of the market. They launched TLE 400 in the Latin America markets or LMIC market. And if you look at the North America, so the sales were driven by increased volumes in the US. And then if you look at the Europe, so they entered into a long-term partnership with a leading generic player in EU region for contract manufacturing opportunities. So they are also doing pretty good in different markets. And if you look at the synthesis business, so synthesis business is contract development and manufacturing services for global pharmaceutical companies and several late-stage projects. So they have steroid and hormone manufacturing capability. They do sale and manufacture of specialty ingredients for use in nutraceuticals, dietary supplements, and cosmeceutical products with a natural extraction capability. So if you look into their different product and service offerings, so the commercial scale contract manufacturing, clinical phase supplies, and then they also do analytical and research service, nutraceuticals, dietary supplements, and also cosmeceutical products. So if you look at their filings, for example, so their API validation plant in unit 5, and then their custom development of authentic portfolio initiated. So they have Laurus synthesis limited, which is also APS validations plant. If you look at their infrastructure, for example, so they have dedicated manufacturing 137 kiloliter capacity for steroid and hormonal intermediaries. And also if you look at their dedicated block setup in unit 4 for their high potent phytochemical APIs. So they are also doing a lot of things in that particular segment as well. So their synthesis business is growing, though it's a small business, it's growing in a much higher side. They see their synthesis business will be 25% of their total revenue in the next 3 to 5 years. So they have high growth trajectory for synthesis business, and it's also highly profitable when compared with the other APIs and other businesses. And then if you look at the Laurus Bio, which is comparatively smaller, much smaller, and they are growing on a good phase. And then if you look at the capacity, they have 180 kiloliter fermentation capacity fully commissioned, so they are acquiring additional land for creating 1 million liter fermentation capacity. And also they are leveraging parents existing global partnership and strong their skills. And also if you look at their Laurus per segment, it was largely stable. And if you look at their they recently commissioned remaining two fermenters of 45 kiloliter each, taking the total operational capacity to 180 kiloliters currently. So they are in process to acquire land, so they will reach 1 million liters fermentation capacity. So they are doing pretty good on this segment as well. And if you look at their manufacturing locations, they have manufacturing locations in Visakhapatnam, so they have different units. And then they have manufacturing locations in Hyderabad, Visakhapatnam, and also Bangalore. And also they have a lot of facilities which are approved by US FDA and other different regulators in the world. And if you look at their future capacity expansion, so they have a lot of capacity expansion, all brownfield and 2 greenfields in Hyderabad, 2 greenfields in Visakhapatnam. So they are looking to increase their capacity, so they are in capacity expansion mode. So they are going to spend their capex of around 1,500 to 1,700 crores in the next 1 or 2 years. And they are expanding, they are almost doubling their capacity. If you look at the total reactor capacity in financial 2021, it was around 4,600, and then it is going to increase to 5,600. And if you look at the formulation, so they have huge plans. They are increasing from 5 billion capacity to 10 billion. They are almost doubling their formulation capacity. So I think they are seeing a good growth ahead. They are investing in their manufacturing facilities, and they are expanding their capacity. So they are in capex mode. So I believe the growth will kick in the next 3-4 years. And if you look at their R&D, so they are doing a lot of R&D expenditure. So they were doing about 6 to 7% in the past years, and currently they are doing about 4% of their total sales for R&D expenses. So they are investing in a lot of research, also to do a lot of filings and new innovations and so on. And if you look at the growth opportunities, what are the growth opportunities for this particular company? So they are, as we said, they are increasing their formulation business capacity much higher. So that's going to provide growth. And also they have product launches in anti-diabetic and CV portfolio in the US and Europe. So their brownfield project, so double capacity, so as we just saw. And they have robust order book in anti-diabetic, CV and PPI brownfield capacity addition in the API also. So they have leadership position in ARV, CVS and oncology APIs. And then if you also look into their synthesis segments, they are well positioned to meet fast growing global demand from NCE, drug substance and drug products. So they have a dedicated R&D center, and they are also greenfield manufacturing unit for this segment as well. And if you look at their biologics, for example, so they are expanding their biologics CMO. So they are commercial scale up of new fermentation capacities. Also doing they are doing food proteins. So people are becoming more and more health conscious, and then they also have biologics food proteins they are doing. So that's also pretty good to see. So and also if you look at their another one, which is Immuno Act, which is their recent acquisition. So they signed an investment agreement with Immunoadaptive Cell Therapy Private Limited, an advanced cell gene therapy company, for 26.6% stake in the company. So they will get that technology, and then it has immense technology. I just read about it, CAR T cell therapy. So it's not available in India, so it's available in in the Western world. So there are 5 US FDA approved CRT cell therapies from Novartis, Gilead, and also BMS, and that they are also developing a lot of products. So they will get these products from the IMO Act, and then they can also integrate in India. So they can provide cost efficient these technologies in India as well. They don't have commercialized product yet. So although all of these 5 product pipelines they have are in clinical trials, and then if it's successfully approved, and then they can push it into the market as well. And then if you look into their financial statements, so they are doing very good growth in the recent quarters, but in the past 3 quarters in financial 2022, that did not go well because of their anti-ARV APIs, which was grown much bigger in the past year, and the recent year it is doing a lot of degrowth because of inventory destocking. So it's going to soften after Q4. That's what management guides, but they are going to be in short-term pain in 2022. So their 2022 numbers will not look good when compared with the growth in the past numbers. But then it's going to do well in financial 2023 and 2024. But in this year short term pain, they are going to phase, and then they are going to do well in the next 2-3 years. And if you look at the EBITDA margin, so they clocked even 33%, and the recent quarters 29% and 38%. But then the management is confident that they can maintain their 30 plus margins, EBITDA margin going ahead. So that's good to see they are going to maintain the margin levels. So, and then if you look at the return ratios, that's good. And then debt is not that high, but still they have good amount of debt, and they are planning to spend about 1500 to 1700 crores capex. So they are not going to reduce debt immediately, but maybe after 2023 they will reduce some of their debts. So the free cash flow, I don't know whether they can be do any free cash flow in the recent years. So I think it will be in next 3 after 3 years they can have some free cash flow, but currently I don't think they can have some free cash flow, but we will see it in the cash flow segment. And then if you look into their income statement, so in the recent quarters, so they were growing pretty nicely, and their operating margins were well above 30%, 33, and the recent quarters 28 and 23%. But the management is confident it will go back to 30 plus percent EBITDA margin. That's good to see. And also if you look at their net profit, it increased from 44 crores in March 2019 to almost 300 crores in March 2021, and then it reduced back to 109 crores in December 2021 because of the reduced margin and the reduced sales because of the ARV APIs. But then it's going to back in track in the next year or two. And then if you look at their total year over year income statement, so then in March 2020 they did about 2800 crores, and 2021 they did 4800 crores, huge jump. So they have high base in 2021, and then 2022 they're facing this ARV APIs degrowth. So then that's going to have a short-term pain, and the next year onwards they can still continue to grow. I'm expecting this company to grow about 15 to 20% in the next 3-5 years. So they have a very good expansion capex expansion plan. So I think they are going to have a good growth ahead. And then if you look at the net profit, so they increased from 267 crores in 2020 to almost 956 crores in 2020 to 2021. So I think they also have high base in 2021. It's going to take some time to have good growth after this, because they are currently 956 crores, and then I don't think they will have this kind of jump because they already reached 32% EBITDA margin. Their EBITDA margin will be somewhere around 30 plus percent, so they cannot improve their EBITDA margin any further. So they already have high base, so they can only now grow at the top line and bottom line at the same phase. And then if you look at the sales growth, they did phenomenal. And then if you look at the profit growth, very good. And then return on equity 20 plus percent, very good. And if you look at the balance sheet, so they are increasing their balance sheet. And then if you look at the borrowings, they still have borrowings, for example 1000 crore in 2022, 1400 crores in 2021, and then March 2021 and September 2021 they have 1650 crores. So they have borrowings is also increasing because they are also increasing their capex, because they are investing in their capacity expansion. So I think they will start reducing debt in next 1 or 2 years, so because they are investing heavily in the next 1 or 2 years. And then if you look into their balance sheet metrics, their the net worth is growing 18 plus percent, their dividend amount is increasing, and then if you look at the debt to equity ratio, it's decreasing, but that's not a lot. And then their return ratios is also increasing. That's good to see. And if you look at the cash flow statement, so their operational cash flow is pretty good. And then if you look at their net cash flow, it's not a lot. So their free cash flow, they don't have much free cash flow yet, but then some of the analysts are projecting 2023 they will have huge net free cash flow, but I'm not sure whether they can get free cash flow in 2023, because they are going to invest heavily in their capex expansion plans and so on. So it will be difficult to get a free cash flow in the short period. So I think it will take 3-4 years for them to come to any reasonable amount of free cash flow. And then if you look into their PAT growth of analyst expectations, so analyst is expecting around 6,300 crores in 2024 and 6,700 crores in 2023, but management is expecting they have an ambition of reaching $1 billion revenue sales in 2023. So that is 7,400 to 7,500 crores, which is much ambitious. I don't know whether they can reach it, but they are confident that if they get some of the approvals from the regulators and everything goes well, they can reach $1 billion. So that's pretty good to see. They have high ambitions. And if you look at the net profit, so 2024 one analyst is projecting 1,100 crores and another analyst for 2023 are projecting 1,400 crores. So I think that's without taking into account the recent slowdown in in the ARV APIs, I think. And if you look at the peer comparison, so if you look at the Divis Lab, so they have revenue CAGR of 17.6% from 2020 to 2024, but then Laurus Lab, that are projected revenue 6.7%. I don't think that's pretty on the low side, personally. So they are going to grow about 15% at least, I believe. And then their return ratios are also comparable, and then return on investment, the Divis Lab is much higher, and the valuation also, Laurus Lab is trading bit cheaper when compared to the Divis Lab. And if you look at the shareholding pattern, promoter shareholding is decreasing, and promoter pledge as a percentage is decreased. That's good to see. But then their shareholding is slightly decreasing. And then if you look at the FIIs, they are increasing. But if you look at the mutual funds, they are decreasing. In the recent quarter, from September to December, they increased the mutual funds. But then if you look at their mutual funds, what are they doing in the recent months? So they are buying in October, buying in November, buying in December, selling in January, and then again buying in February. And if you look at which are the funds which are holding, is Kotak Emerging Equity Scheme, Kotak Equity Arbitrage, and PGIM, Sundaram Midcap, and IDFC, Edwellas, HSBC, UTI, Mirai Asset, and then you have Tata Midcap, IDFC, and so on. So if you look at what they did in the recent months, they almost bought a lot of the fund funds bought in the recent months. So that's also good to see. So mutual funds are buying, so they see value after this recent slight correction. And then if you look at the valuation section, so in 2022 they are expected to about 4,700 crores. 2023 I put 7,000 crores, very ambitious, because the management was pretty confident, so they are going to reach $1 billion in 2023. The analysts are expecting 6,500, 6,700, but I put 7,000 crores. So because management was confident, so I put 7,000 crores. The management was confident reaching 7,500 crores in 2023. That's pretty ambitious, but let's see whether they can reach or not. But I projected with pretty on the higher side, so that's something to mention. So the revenue is 7,000 crores with 48% growth, and then 2024 7,500 with 7% growth. And then if you look at the net income, so they were doing 956 crores in 2021, 822 crores in 2022, and 1,275 crores in 2023, and 1,350 crores in 2024, with a growth of 55% for 2023 and then 6% for 2024. And then if you look at the price target with the current valuation, which is PE of 38, so then the 1 year price target would be 902, and 2 year price target would be 955, with the price cumulative growth of 55% and 64%. But then the PE, which 38 is on the higher side, but if we take the average PE and if you look at the revenue growth of 15%, I would say 30 PE is good. So if you look at the price target with the P of 30, then the 1 year price target would be 712 rupees, and 2 year price target would be 754 rupees, with the price cumulative growth of 23% and 30%. So if you ask me in the final verdict whether this company is worth a buy or not, so if you are an existing shareholder, and this company is going to grow, as you see, so I think if you are an existing shareholder, you can gladly hold this stock. But then if you are a new investor, if you are looking to buy at the entry point, I think yeah, if you have a long-term overview, you can still buy, but then the reward is not much in the short term, but then maybe in the next 5 to 10 years it can do well. But in the next 1 or 2 years, I don't see much gain again when compared to other opportunities in the market. So personally, I will not invest in this stock with the current market price, but that's my personal opinion. If you have contradicting thoughts, please let me know in the comment section. So that's it for today, and if you like this video, please like, share, and comment. And if you want to have a free email newsletter from this channel, please subscribe in the link below. And thank you for watching, and have a nice day. Bye bye.